Hi, this is Nick Poller, and I'm going to go over our most recent briefing report, which is our monthly publication, in this case covering the markets in May 2023. So this report is titled The Great Echo Trade, Y2K and the Pandemic. I think as we've all sort of observed, mega cap tech has had a strong run since last fall, and then last month there was another period of exceptional performance. Here we have some of the themes that we've been tracking recently. Most of these themes underperformed in May. The ones that did had a kind of marginal outperformance. So the Russell 2000 growth outperformed the Russell 2000, but still lackluster returns for May. Where there really has been outperformance is mega cap tech. So tech was the strongest sector in large caps. Large caps as a whole, however, were only up 1.1%. As you can see here, the proxy we used for mega cap was FAANNGT, Facebook, Amazon, Apple, Netflix, Nvidia, Google, Tesla, and that outperformed the large cap index by 16.8%. In general, valuations have been less attractive these past few months. So this is the low price to sales to high price to sales spread over the past 3 months. As you can see, valuations have been mixed across the size classes, but most strongly in large caps. And then finally, getting to the title of the report, what we have on this slide is a comparison of the tech rally, tech boom, and the current cycle. And so we have the belief that the miniature capex cycle that we saw during the pandemic, with a lot of investment into tech spending, we'll see something of a reversal over the next few years as there's some rebalancing to areas of the economy with cash flows that will be realized in a shorter time frame with more attractive valuations. So what we looked at when we have capex tech spending peaks, we looked at the proportion of investment in technology divided by GDP as a whole. We looked at that ratio. We've identified June 2020 as the peak tech spending, and we expect to see a normalization afterwards. So what we saw in 2000 was really a little bit of a flattening in the period following the collapse of the tech bubble. There are obviously quite a few differences in terms of the economic dynamics going on at that time period as compared to now. But where we do feel confident is in that redirection from peak tech spending towards other areas of the economy. And so we should expect to see at least a somewhat similar dynamic in terms of the performance of tech stocks. This is a very choppy aftermath, particularly in the couple of years immediately following. But particularly if you look at periods like here in 2002. But I think that hopefully this gives a way of framing this current market action, which we're seeing right here. As always, you can find the full report on the website. And if you have any questions, need any further information, please reach out.